Good morning and welcome back to the Opportunistic Trader for October 8th, Monday. Hope everybody had a good weekend. It was relaxing except for the Dolphin loss that they fell apart in the fourth quarter, and actually I think they gave up either 28 or 24 points or maybe more in the fourth quarter, which in an NFL game you never see. But anyway, we'll get past it and go to an exciting week in the market and go over what happened last night, Friday's trade action, and what we're expecting for today. I'm joined by Vince. Good morning, Vince.
Good morning, Larry. Good morning, everyone. Good to hear you.
Yeah, as you as well. So, Friday's action was pretty good on the S&P. It got smashed. And it actually did the same thing 2 days in a row, which was kind of shocking that they rallied 20 handles on Friday off the low and 20 handles on Thursday off the low. So I don't know if we're going to be able to pull that today, but we'll see. Our only position for now is short S&Ps, looking to buy some crude oil. Crude has come in a bit. It was down a little over $1. It's back in the 73 handle. It was in the 77 handle midweek or Thursday of last week. So, it's got a pretty big trading range, and, we'll keep an eye on that. Looking at overseas, China, which I know that I'm going to lead you up to speak about this, but China was down 4% and change. Now, a lot of that is because it was closed for the week, but I want Vince to discuss China and what's going on there and how it's affecting other markets. So, Vince, you're up.
Oh, okay. No pressure. Look, the PBOC, officially China was out for a week. They call it the Golden Week. It's like a holiday for celebrating, I don't know, communism or something. There's two of them a year, but during that week they're officially not in the markets. So that's why you'll see the onshore yuan, the renminbi, versus the offshore yuan start to diverge. So basically, the world is pricing markets. We knew China was going to open down 3.5%, 4%. Based on how offshore instruments were trading. So, for example, while their currency was unchanged for that week, basically, the currency free floating in the world, the reality check was down consistently. So it broached as high as 6.9, and now today, all of a sudden, starting with the currency, the yuan is up it's up almost 1%, 0.85%, which is really the whole week's move of the currency as measured by the rest of the world, distilled into one day. So why does China coming back online matter if markets already knew we were going to come in 3.5% lower, if markets already knew that the yuan was going to come in at 6.9%? If we already knew these things, why does China coming back online matter? And it matters mostly for people who trade gold, but gold is lower today. So we could have seen that coming had we talked about it, but that's because Chinese gold activity is kind of weird during this time. But I think what matters now on the equity side, that ties in directly with U.S. stocks, is that China's economy is now perceived to be in worse shape than people think. And although they had reduced the amount of money going into the week, they said we're going to reduce the amount of money that lenders must hold as reserves for the fourth time this year, which released about 1.2 trillion yuan into the market, about $175 billion. They thought that would be enough to hold them over for the week. The potential for action last night was them coming out and saying, we're going to do something else. We're going to do this. We're going to do that. But they did nothing else. And so there was nothing done to make China rally. There was nothing done to stop the yuan's debasement. And so that leaves other smaller countries in like emerging markets in more of a crisis. And now they're selling everything they can to get their hands on dollars. And so what is China's problem with us in trade and bonds is now a bigger problem for other people. It's kind of like everyone's offloading their problems onto other people. And China is the fact they did nothing so far is the reason. Like basically, the markets are where they should be. We knew this was coming, but the fact that they did nothing else last night is a bad sign, at least in the short term, for all global stock markets and bond markets. Hope that helps.
Yeah, no, it does. It's interesting because it did price down about 2%, and it gave it an extra 1.5%. And people actually thought last night. I saw some comments on Twitter that the market was going to rally. It definitely didn't, and it's down 18% again for the year. Close to the lows. The big caps are making new lows. Hang Seng is down significantly as well. China is really an island among itself, not really having that much impact on the U.S. Interesting, going across the pond, the DAX is making a low of pretty much the entire move. It's trading under 12,000. It's been here before and then rallied about 4 or 5%, but this time it's sitting on the lows, and it's down 100 points this morning, along with the FTSE. So all of these markets are taking it on the chin, and I guess it's Columbus Day today, and markets are open, but I think the cash bond market is closed
Right.
today. So I don't know if that's a little bit of the reason why we're not seeing a bigger impact on the markets at this point. And, we'll keep an eye on that. Interestingly enough, today is an expiration day, and the straddle is pricing in about $13, $14. So that's been more than we have seen, and I think volatility is up to where's volatility? 16 and a quarter. That's pretty awesome. So there should be some good trading going forward. I mean, if we stay here, it'll be back to the way it used to be. But as you know, it can't do it because the computer can't handle it. So they'll put a tight squeeze on that. But at least it looks like there'll be some bigger ranges today, or in this week in particular. The VIX is at 16 and a quarter. That's really interesting because the October VIX is now underneath the futures, which doesn't even make any sense. So I don't know when the actual expiration is for the VIX futures. But it's underneath the cash. We saw a 25 to 30% premium on this future about 2 weeks ago. So that's interesting in itself. So I don't know if that means this is going to be contained, and this is some kind of just a mark on the volatility. But I'm looking at the VIX, and it's only up 5% today, whereas the cash is up 10. So we'll keep an eye on that. One stock I wanted to point out is GE. It had its best week in a long time. It's actually up today in a down tape. It's trading at 13.5. It's nothing. It's not really a good day trading stock for sure, but it might be investable at this point. They have a new CEO, so we'll keep an eye on that. And scouring the board for equities, I don't see much going on. Apple's down small, Facebook down small, Netflix down about 1.5%, and nothing's really moving too much. I think energy is getting hit a bit. The oil is down a little over $1, and we're looking for a level to buy it for a trade. We think the trend is intact, pretty much for an up trade. We had been shorted. We basically have a position back book, but we would look to, get out, in the 72 handle of that. And then that actually would probably be a winning trade. And that's why utilizing options is such a critical thing to keep you in positions, which we always discuss. So we were able to stay in the short S&P position and the short crude oil position basis options. So options are like a stop, but they give you the ability to stay for a lot longer, and you're not out of the positions. You're just stopped out to the upside or the downside. So I wanted to discuss gold. I think you probably discussed it on your show. So if you want to go over gold for us, it's down $17. And I was just kind of wondering why, because I don't see, anything really key to moving it.
The simply put, gold is the market that just is inefficient. Gold should have been down on Friday, and it wasn't. And gold should have been down because of its increasing correlation with the yuan, but it chose to ignore the fact that the yuan had been weakening for the whole week and decided to just do it all in one day. People, I think, were probably just scared to sell gold because they didn't know what China would do. But it was a sale on Friday. And I think the important thing for active traders right now is we are right now at, I think, my and Michael Moore's most important number above the lows, and that's 1189. I think if we trade below 1189 for any time period or a heavy volume, the opportunistic trader low of 1167 that you called would be in jeopardy. I don't see any reason. Sadly, I don't see any reason to buy gold in this situation, because I think there are countries above it have to sell. I think China is not buying, and I think the dollar is doing what it's supposed to do, and that is rally because the Fed is draining liquidity. So gold should go lower, and it should have gone lower on Friday, but it didn't. But so now it's catching up because all of a sudden people are aware of China. That was an opportunity on Friday to sell gold. If you were speculating, it should have happened that way. There's really nothing to say except if you're not short now, below 1189 might not be a bad level to get short or cover your shorts if you were already short. It's going to continue lower. I think below 1189 down to 1179, and then possibly take out the lows. That's pretty much all there is to say on it.
Okay. I don't have a position there. I was just looking at it and wondering why, when the bonds reversed and now are the other way, that gold would take a hit when it looked like on Friday it should have taken a hit and never took a hit.
Exactly. I mean, we talked about this. Every other market in the world figures out where it should be, even if China is closed. Gold, for some reason, actually waited for China to come online so it could say, oh, I get it. We should be lower. So it's an inefficient, illiquid market, and it should have been sold then, and that was opportunity. But there you have it.
Nice. I'm looking at the emerging markets. They're all making lows here. FXI pretty much on the low. The EM pretty much on the low. There's a lot of pain out there in markets around the world, all except our market. Our market is in no pain. It actually wants to rally. And, until they change that mantra, it looks like, what do we say, the best house in
in the worst neighborhood? Yeah.
Exactly.
The other thing is that incredibly adds to that is I don't think Europe has any room to ease rates anywhere. So if we are at, say, if we're coming out of a global recovery and we're going into a global recession, Europe can't do anything. We have bullets to lower rates again. So in a recession, we're probably going to hold up better than everyone else anyway. It's the I guess it's the bonus of having reserve currency.
Yeah, I don't think we're lowering rates anytime soon. I don't.
No, neither
Yeah.
do I.
I mean, we haven't even had a 10% or 20% correction.
No, we haven't.
We haven't had anything. So
I don't think we're going to. But I'm saying we're the only people who can, if we want to take care of ourselves, lower rates. Europe, in some places, is still running negative rates. Plus, Italy, doesn't want to comply with the ECB standards. No one else has bullets, is what I'm saying. I think the world really could sell off even more. The contagion can go to Europe, and I think it could stop at Europe if it's not already there. But I think we're actually in good shape, uh, because we have we're tightening into strength. If anyone in Europe tightened rates, the continent would fall into the ocean. They can't do that.
I don't I don't know if that's coming, but it's just the divergence. We discuss it almost every day. It's just mind blowing. To wake up and see the S&P only down $8 when China's down 4.5%, and Europe is down 1% across the board is it's pretty amazing how well our markets are holding. But listen, if we get through yesterday's low, potentially, I mean, we could dip another 50 handles, and 50 handles isn't. We still haven't had that 1% correction day. I mean,
right.
Literally, the SPOO hasn't closed down 1% since June. And vol, when we get that 1% settled, vol could be 35. I mean, this is how crazy this market is. I don't know if it's people that are under hedged. I don't know what it. I'm trying to figure it out, and I can't get a good read on what people are here. Are they under hedged, or why is vol up so much from the low? I'm not saying it's up and elevated. 16 by no means is elevated, but a week ago we were 11 and it was going into the abyss. So I'm not understanding why coming off like 40 points in S&P over 5 days is a reason to blow volatility up. But I guess they're speculating another move is coming in here, and the next one will be more vicious. So,
right.
We're leery of that. We're trading with the short bias. We're going to put on options to capitalize a little bit on the downside. I'm going to look to go out a little bit more in time here than a day or 3 days, maybe put something on for a couple of weeks. We're in seasonality. Everyone's like, October is good. I don't know how everyone says October is good. Every October I remember has been bad. So, this is everyone's like, September is the worst month of the year. I would say October is the worst month of the year, and we always get skittish. And then, coming into the election, that's another issue for the markets. Basically seeing if they can hold on to, the House and the Senate. I don't know if it's going to, I don't know what's going to happen there, but that's going to be a big thing coming into the next couple of weeks, because the election is literally less than a month away. So it should be interesting to see how all that plays out as well.
And then just to chime in on that note, the one interesting thing that China might hold over the U.S. is a little bit of leverage into those elections if they wanted to pressure the markets, or any sort of bargaining power China has is before those midterm elections, anything that they can do. So that's could affect the markets.
Yeah. Listen, China could do one thing right now, okay, and it would debacle the markets. You know what it is?
I say it's drive yields higher.
That could be one thing, but the instantaneous thing is if they stop letting Apple sell products in China. If they do that, all hell is going to break loose. So to me, all they have to do is something as simple as that, and the whole world will go into a tailspin, and it will be it'll be Armageddon all over. So that, I think, is the biggest caveat here. My thoughts.
Right.
Rates have gone higher. We've seen 3.25 on the yield basically now. So what's going to happen now? I don't think there's much difference between 3.25 and 3.5. It's high rates that we see.
Also depends on how we get there. If we were to get there in 2 days, creates a bit of a panic. Then you get equities down. You get people talking about it.
Yeah, but equities didn't go down when we went from 3 to 3.25, really. So I don't know.
Oh, that's the Russell.
Well, yeah, Russell, what's it down 2% from the high 3?
Down 4% last week.
Was it down 4? Yeah, I guess that in the millennial new world, that's a crash. you better watch out.
It crashed from +8 on the year, +9 on the year to +5
5
on the year.
Right, exactly. That's the crash. So, I don't see, I don't see.
It's a tipping point environment. It doesn't happen until, what's the expression? How did you go broke? How did you go bankrupt? Slowly at first and then all at once. It's a tipping point environment. People are in denial, and then all of a sudden it's like, oh yeah, we should pay attention. How else do you explain the lack of initial reaction to the jobs number? And that jobs number was weak. I know the revisions were strong, but the jobs number was weak. Bond yields, bonds should have rallied. They didn't. The dollar,
but it wasn't
should
really
have
weak
sold off. It didn't. And then stocks just sold off an hour later.
But what was
everything happens not on a tight schedule. It just seems to lag. Like stock market participants are in a bit of denial. Hence, them buying VIX short dated.
But what was weak in the number? Longer. What was weak? Just the actual print of the number, but they're saying that number, they revised the last 2 months up huge, and they're basically saying that number would have been a huge number, but the hurricane changed the number. So and the unemployment rate itself is the lowest since basically we were
so
born.
So the unemployment rate, understood, with all the revisions, all the other stuff, the unemployment rate itself was there was an excuse for the bond market to rally, and it didn't. There was an excuse. There was the initial reaction. I know the unemployment rate was low. The core earnings were as perceived, and I know the revisions were bullish, and that is why we sold off when you think about it. But initially, I thought we had an excuse to go higher. But I think there's a lot of factors going on here, and I think some of them are the market said, oh, we can take this and this, but now if you throw high oil prices on the pile, and somebody said 3.25 2 weeks ago, so we're going to react to that, and then the VIX started to rally on the short end. So I think for every person who has bought a put on Friday, there's probably 3 who haven't, and that'll keep the VIX on the short end, on the short term, buoyed. The point is the people in the market are in denial, and they're complacent, and they react 25 basis points later than they should have. That's just my feel.
Right. Yeah, we'll see. These numbers come and go every month, and they only react to it for a short period of time. But overall, the market looks a little skittish. But in one hand, it looks skittish, and then when you look at it in the other hand, it looks like it wants to go higher. So, I can't make heads or tails of the market. Should be significantly lower. I don't know why it isn't. So you have to trade. I would trade accordingly. You got to trade accordingly to that, and that's what we're gonna do. But overall, I don't see a lot. I'm going to look at option trades for today. We are short, actually, from this level. They ran it up on us on the close. So we will, assess through options as a hedge how we could best stay in this position or cover it for a small profit or small loss. Oil again, I'm looking, to the long side of that. I don't think the move is over for a trade. Uh, Gold, I'll leave to you. I guess we're pretty in tune. Currency markets look very interesting. The dollar is very, very strong across the board. So that, I don't see a trade for me there. I don't know if, Mike, you see anything that you like.
No, not so much. Keeping an eye on everything, but yeah, as you mentioned, euro's lower, pound's lower, but dollar yen is not higher. Actually, I just posted in the chat. Deutsche Bank and a few other firms are looking for trade of the week. Dollar yen to move lower on kind of risk aversion. China's back in. So euro yen's had a significant rally over the last few weeks, and but has come off. We got above 131. Now we're trading below 130. It's yen for a while was not trading as a safe haven, and now all of a sudden they're saying it is, and so yen is stronger. So dollars stronger across the board, but not so much against the yen. Also, Aussie is actually up a few pips today, so it's really euro and pound weakness. But at the same time, guess where the pound is, Larry?
130 to 131.
Exactly. 130.40 right now. Larry's been having that thing pegged to 131. A lot of Brexit news. But actually, it's funny, I haven't seen a whole lot of Brexit news today or over the weekend. So it's taken a 24 to 48 hour breather on Brexit news. But that's definitely driving that. Dollar CAD's trading at 130 right now. So it's CAD weakness short term right now because we were trading well below 129. And remember, we actually got below 128 once it was 2 weekends ago that they came out with that Canadian trade deal. We got down to 128, and a lot of people were they were saying sell the rallies, but here we are, we're two big figures higher. So, that event came and gone. And as well, if you look at dollar MEX right now, we're at 1891, which is pretty much where it's been, give or take 2%, which for an emerging market currency isn't that large of a really, midpoint, waiting to see what happens here. I think it's, October's always a volatile month. We've got the midterm elections coming up. China, I just brought up the chart of the FXI for everybody to see, and it's basically on 52-week lows. So a lot of interesting things converging right now.
Yeah, we'll have to, keep our eye on it. It just seems that it becomes a springboard the other way for the S&P for whatever reason. But the only nice thing is we're legitimately now about 50 plus handles off the high, which is 1.5%, 2%. All of a sudden, if you look and it slips away and we're 2.5% off the high, then people are going to have to take notice and they're going to have to make moves outside the box. But again, just looking at the equities today, again, they're going to move them around to put them in line, but I don't really see much moving on the stock side. And again, maybe, it's this Columbus Day holiday. I don't know up in the East if I think the kids get off school, but I'm not 100% on that. But down here they don't, so I don't know. Maybe they take off for other things, but I don't know how busy it's going to be today. But the interesting thing is, this VIX future versus the VIX cash. If it's, I don't know where the VIX cash is right now, but the futures are trading at 15.85.90. So, it's underneath. So they're not expecting anything big out of volatility here. So, we'll see. We'll see where it, where it goes and what happens with it. You have any thoughts on vol here, Vince?
We talked about it last week. I said a settlement on a weekly basis gives you a bias to be long above 14.5, and last week, this week we're above that now, and 14. If you're playing, I'm considering playing long the VIX with a stop at 14.7 soft, a stop at 13 hard. I think on the short, I'm talking about the short dated. I would use the futures and their corresponding levels, but I think we're going to see backwardation as people panic to run to buy short dated options, and if it becomes a prolonged issue, then you'll see the curve flatten out again as volatility goes higher. So I have my eye on buying the VIX, buying dips in the VIX between 14.5 and 15.25. My eye on selling gold if it gets up to the 1193 area, and believe it or not, the we had a sale yesterday. We had a sale Friday in the Nasdaq that was nice. We caught like 20 handles in that.
Nice.
If yeah, Sunil and I were talking about that actually. It was a signal based. I think the Nasdaq under 70, 77, which is entirely possible given the way it's moving now. Might be. I think the Nasdaq at 70.57 might be a level to buy, but between here and there, I don't see a reason to buy it. I think that Europe has bigger problems than people are saying, and so I won't be surprised to see European problems come over and actually affect the dollar stronger. So conversely, I would express that by being short gold and being long options or it's long the VIX. I just think that Europe's got a problem that the U.S. can't fix for them because we are worried. We are dealing with our own domestic issues, and that's it. Shorting gold and being long the VIX are on my radar for today.
I should have bought that oil. I should have been a little more aggressive. Oil looked a little, like it was gonna rally, so it just rallied about 50 cents off the low. We missed that one for now, but overall, a fairly quiet morning. Volatility is elevated. Stocks are not showing their hand right now. I can't really pick out any stocks that are down that much. I guess energy is down 70 basis points, but that could flip around with oil today, depending on what that does. And I just think you got to keep your powder dry. It's an interesting level. All of a sudden, you're going to look up and see the S&P lower, and people are going to be forced to make a move. Markets are down for the month about 1% and change. Russell is down 4%. And the Nasdaq is down like 3%. So these markets are coming in. They have come in. Volatility is up. And it's going to be interesting to see how everything plays out here. And one of these days when we open down like this, they're not going to buy them like they do every time. And if they actually come for sale, it could get pretty ugly. We'll be on top of that for the close with the market on close imbalances and looks in individual names to, give our membership a advantage over the regular guys out there. So, that's what I see going on for today. And again, it's fairly quiet. S&P down 8.25, and the Nasdaq's down 30. What's interesting is my DAX, which is in gray, so it's hard for me to see. I don't know why it's not in red. Is down 115 points, basically on the dead low of the session, down about 96 basis points. But what's interesting there is that this is pretty much the lows of the move. It may have been about $50 lower at one point on a skip to my loose stop, but this is the lows. This is the low in every market around the world. And our market is, let's just say, very jolly.
Near the highs.
We're very jolly while everyone else is sad. So at some point, I think it will it'll hit us. But again, we want to be careful. That rally on Friday, we sold into it. We sold it a little bit too early. But the rallies have been, off the lows. I couldn't believe Friday. I don't know if you saw what was going on. We were on the dead low. All of a sudden, stops on a dime. Everybody starts getting shorted. And then the next thing you know, it blows everybody's head off. And everybody's so short term that when everybody's short, everybody has to run and cover at the same time. So
sounds like Yeah, by everybody you mean algos in that respect, I think.
Well, algos, individuals, traders that are out there, just in general, the marketplace thought that would be, the end of this. But what's interesting is if we get into the 70 handle, which is only 5 points away, we could really get active here. So we're going to keep an eye on that. And overall, there's not, again, not a lot in stocks. Gold bounced a little here. I see it bounced a couple of bucks. It's interesting because the bonds were down hard last night. They were down 20 ticks, and now they're only down 6. The 10-year is actually positive. So it's not a yield-related scenario. Maybe it's just more catch-up from basically markets overseas. But the China move is humongous. I mean, that you don't think that's a huge move here? 5% overnight?
Well, I mean, but you and I talked about that. It's the fact that they let it happen as opposed to doing something about it when they reopened. They didn't come out with any new policy or say anything. They let it happen.
Yeah, but I mean, maybe that's the way you got to do it. Maybe you could respect that more than on every down day having people freaking out. When the market goes down like 1%, we couldn't handle. What did Jack Nicholson say in A Few Good Men? You can't handle the truth. The market can't handle the truth.
I get what you're getting at. Yeah,
I'm just saying they can't handle a down move.
Right.
They can't.
And there you have it. I mean, we would have people. The article I wrote over the weekend, A Hunt for Red October. I think I said, on a 1% move, we'd have whining Wall Street traders crying to the Fed to lower rates. Meanwhile, emerging markets, central bankers are probably getting ready to jump out the window after 4% moves that they've had to tolerate daily for a month. So yeah, I mean, I guess it's day-to-day living for them in China, and they're not as complacent as we are. But yeah, they're letting it self-clear, which might not be a bad idea. We can't let things self-clear anymore. It's a nanny state for financials.
Yeah, it's interesting. As we're speaking, I'm looking at vol even tick higher. Straddles are bid today. Today could be a good one.
Vol could stay bid even if the market goes
straddle
sideways.
For today is $15, $15. So they're saying we're going to move 15 points today. So if we move 15 points down, it would be very interesting how everybody handles that one. So we'll keep an eye on that. Again, the bond market is closed. The futures are open, but the cash is closed. The market, was down. It's now up. S&Ps are now down 9.25 in a slow tick by tick meltdown. It's not really moving too much, and that's what I see here. And I'm pretty much done as far as my thoughts. I will be in the chat all day, and right after we get off with ideas and thoughts. And the schedule today is we're having Phil Flynn from the Price Futures Group on at 10 o'clock, a Fox contributor, talking about oil, commodities, and maybe he'll get into the global landscape on the equity side, because I know he covers pretty much everything. And then at noon, Adam Collins is coming on from COT, talks about the COT data, and he'll be on. So look forward to hearing from him. I have a couple of questions.
That could be interesting on the bond side if he has some comments there.
I'd like to know about bonds. I'd like to know about S&Ps. I'd like to know about oil, just seeing what positions are there. Again, markets look a little skittish. Volatility is up, which is good, and there'll be really, really good opportunity today across the board. So we will we will be to you. S&P now leaking lower, down 10. So it should parse out to be a very, very interesting day. And I said it on Friday, and again, it didn't work out that well. I thought that they could not do exactly what they did on Thursday. I was talking to my buddy who's a great trader. He trades.
But you mean take it off the lows before the close?
Yeah, or
No, but they didn't do exactly what they did on Thursday. On Friday, that attempt did not do so well.
Yeah,
I mean, I don't need to compliment you, but Thursday was okay. They bought the close. Friday, I don't see them buying the close.
Yeah, they bought the close. I mean,
20 handles. Okay, my point is
off the low. Well, listen,
20 handles, but it did not undo the move like it did on Thursday. You know what I mean?
Yeah, no, I mean but on Thursday we closed down 8 after being down 30, and on Friday we closed down 18 after being or 17 after being down 42. So I'd say it was pretty.
Okay, so in a money term, you're just basically saying they'll take it off the lows 20 handles.
Well, yeah, I'm just saying they saved the market, and it was very frustrating in the sense that it just seemed. You know what it seems like, and I trade it every day. It just seems like they sell, and then they sort of run out of selling, and then all of a sudden, when they run out of selling, they just go and buy everything, and it just makes it extremely difficult to
carry a position.
to hold. I mean, now we're up on our trade, but we were dislocated $6-7. Obviously in a $3,000 instrument, it's not that much, but it is slightly frustrating.
Understood.
So
Larry, can I interject a couple
Sure.
levels since we're talking about the S&P?
Sure.
Because since I've started applying, I mean, I started using my vol system on stocks. I've done better than on gold, but I think that's more common on gold than anything else. I have us below 28.81 in the next hour as setting off another sell signal. Now that doesn't mean it won't reverse and go higher violently, but what it does mean is the risk of 1 to make 2 would be there. You'd have to use your own stops. I also noticed, if you remember on Friday, Crude didn't sell off until after the S&P did. So you're looking to buy Crude and you're short the S&P. Those two might be inversely correlated again. And what I mean by that is people are going, oh, oil is higher. It's an excuse to get out of stocks because we're worried about inflation. If inflation is on people's minds and you buy oil, if you don't get to buy your oil because it rallies, I think your S&P is going to dump. How's that? I'm saying is, if you don't have one, at least you have the other. I think they're inversely correlated this week.
Right.
The higher oil goes, the lower stocks go, I think, this week.
Yeah. Yeah, we'll see. It's going to be interesting for sure. S&Ps are going to open on the low of the move or kind of close to the lows, so we'll get a chance to, see how that goes. But again, I'm not even going to say it today because it's like a jinx. So I said on Friday, they're never going to be able to do what they did on Thursday, and they kind of did exactly what they did on Thursday, pretty much. So I'm not going to say it, but I'm going to think it, that they're not going to be able to do it again. So
Jesus, you just said it.
I didn't say it. I said I think it.
Okay,
no.
I'm thinking. Dear market gods, whoever's listening, Larry did not say that. He was quoting himself from Thursday and Friday. He didn't say it again.
Exactly.
Okay.
But it's interesting, and Mike pointed it out this morning that the straddles are really elevated. So I think that's panic. They're $15 to $17. So
for every one person who bought puts on Friday, there's 3 who didn't, and that's why your short dated vol is up and your back dated vol is not so much as up. I'm not saying that it's not going to go lower, and I'm not saying to fade it, but I am saying something that you have said before. People are complacent. They don't hedge until it's too late. Everybody feels that the Fed is basically a put for them, and Powell is basically saying, I'm going to raise rates. And everything that comes out, he says, I'm going to continue to raise rates in an orderly fashion. And trust me, PMI or not PMI, CPI or PPI are going to come out this week, or both are going to come out this week, and they're going to show, if they show inflation, he's just going to say, see, I told you I'm raising rates again. If they don't show inflation, he's going to say, I don't care, I'm still raising rates. And I think the market is just now starting to see that their bluff has been called. The market rallied saying, we dare you to raise rates. And Powell said, I'm raising rates. And I think he's going to raise them again and again. And we're now pricing in 3 for next year. And the people buying the VIX are just getting the picture.
Yeah.
I want to be long the VIX.
Well, I think people are underhedged. I mean,
yes.
I think a lot of that has to do with underhedging and whatnot. So,
yeah.
SPO's making a new low down 11 and change. Interesting. If it dips into the 70 handle, we'll probably cover our short just to take the trade. But right now we're sitting tight. We'll look at options. And that's it. So we're getting close to the opening. So I want to wrap it up. I went over the schedule today, and we're going to be in the chat room actively today, giving out ideas and information. So I hope to see everybody in the chat, and I hope to see you there too, Vince. Thank you for joining me.
Will do.
Thank you, Mike.
Thank you.
All right.